In college, I made my first $100,000 day trading straight from my dorm using nothing but the right ICT concepts and my laptop. Most people overcomplicate ICT, but when you cut straight through that noise, it becomes very simple. And that's why in this video, I'm breaking down the exact step-by-step strategy that I use and the only concepts that you need so you can start trading profitably with ICT. So I'm telling you, lock in and watch this video all the way through so you can learn all the concepts that I use in order to formulate this strategy that has over a 70% win rate. Now, before we even touch the charts, I want to cover something that the majority of traders end up skipping, and this is what truly makes or breaks a trader. Because the reason that the majority of traders end up blowing their accounts is not because of a bad strategy. It's because they have such a poor mindset. You hear it all the time, and I say it all the time, trading is 80% mental and 20% strategy. And if you skip the mindset part before jumping into any trades, you'll start chasing trades out of straight FOMO. You'll try to revenge trade to win back any of the losses that you took. You'll hop from strategy to strategy if you lose one trade, and you'll just continue to put yourself in this never-ending cycle of losing money and overcomplicating your strategy just to end up quitting. But the secret to having such a strong mindset, it's not that complicated. What I want you guys to know is that trading is not a get-rich-quick scheme. All right, you're not going to start seeing money within a week, not even a month, not even 3 months. For me, it took a year and a half for me to finally start seeing money with trading. A year and a half, get that through your head. Okay, and this was because I was hopping from strategy to strategy. I wasn't following my rules, and I honestly just had a horrible trading psychology. So this is a very long process, and you have to be completely focused on the journey and not think about the outcome. Because I'm telling you, if you just focus completely on the journey of, becoming a profitable trader and the habits and the traits that it takes to get to that end goal, then you will start seeing the most amount of money ever. I'm telling you, coming from personal experience, I've been trading for over 4 years now, and I'm telling you, the most amount of money that I've ever seen from trading is when I stopped caring about the money and I was fully focused on the process and what it took to become a profitable trader. And the next thing I'll say is you guys need to detach your ego. Okay, so come in here with a clear, open mind, because I see it all the time. I'll tell people, start journaling, start backtesting, and they'll be like, okay, I don't really need to do that. Like, I know my strategy, I know the model, I don't really need to journal backtest. And it's like, no, I've been in your exact position. I know what it feels like. I know what it's like to be an unprofitable trader. And these things that I'm going to be telling you are so necessary. It's necessary, and it's helped me personally become a profitable trader. So please listen to me. Drop your ego, because if you don't, the market will always humble the fuck out of you. So that being said, let's now get into the concepts. So the first concept that you guys need to understand is market structure. It is the entire foundation of ICT concepts. It helps you understand where the market is heading. Without structure, a lot of you guys will just be pattern trading the concepts that I'm going to teach you, which is why it's so important to finally start understanding what market structure is. So I'm going to show you now how to actually identify bullish and bearish market structure and how to see when that structure is going to change. All right, so here we have bullish structure and bearish structure. So on the left here, we have bullish structure. Now, what does bullish structure consist of? Okay, so it's consisting of higher highs and higher lows, right? So we have a low, we have a high, or we have a higher low, we have a higher high, a higher low, higher high, higher low, right? And this is an uptrend, right? The market is trending up. So this is bullish, right? Now to the left of us here, we have bearish structure. Now, what does bearish structure consist of? Well, we have lower lows and lower highs, right? We have a high, we have a low, we have a lower high, we have a lower low, lower high, lower low, lower high, right? So this is what bearish structure looks like, and this is what bullish structure looks like. Now, how do you actually identify when we are going to flip structure? I'll show you right now. It's called a market structure shift. Okay, so this is what a market structure shift looks like, right? So we have this series of higher highs and higher lows. Now we end up trading through this higher low right here, and we have something like this. This is a market structure shift, and now we can start seeing a series of lower lows and lower highs, right? This is the market structure shift when we close below this candle right here, right? And this is your bearish market structure shift. Now, a bullish market structure shift is the same thing. It's a closure above that last higher high, or that lower high, sorry, right? And we get it like this, and this is a market structure shift. So now we are flipping structure, bullish, right? And then here we are flipping structure to now bearish, right? And as you can see here, this is your market structure shift, right? And now we have a series of higher highs, higher lows, and now we have a series of lower highs and lower lows. So this is what overall basic structure looks like. I'll show you guys a quick example of what this looks like now on the charts as well, so you can actually identify this. All right, so as you can see from this chart, we had pretty much bullish structure all the way up until around 11 o'clock today, right? As As you can see here, we can just draw this out, and it's kind of easier to see this with a line chart. I find that a lot of people like to see it with a line chart, right? You can see we have a low, we have a high, higher low, low, higher high, higher low, and it just looks like an uptrend, right? This is just an uptrend, basic uptrend here, right? And then if we look at it like candles, and as you can see here, now we have the candles in front of me, right? We have the low, we have the high, we have the higher lows, all right? And we're consistently making higher highs. See there? We're not really getting any bodies closing below these lows, right? But what we see here, we end up getting strong displacement through this low, right? And now we get our market structure shift, right? As you can see here, we stop creating higher highs and we now get a change in trend, right? This is where you get your market structure shift, right? And now we start seeing bearish structure, and now we start trading lower and lower and lower. And we now see a series of what? Lower highs getting formed, right? We have a high, we have a low, lower high, right? And we see lower highs and lower lows getting put in play. And this is now a sign of bearish market structure, right? As you can see here, versus bullish structure, right? So this is just an indication in a flip of trend. So now let's get into the next concept, which is fair value gaps. The reason you need to understand fair value gaps is because you need to see where the market is trading into and then out of. I see it all the time where people don't even wait for these fair value gaps to get traded into, and they'll take trades and then they'll get manipulated out of it, and then price will run in their direction, which is why it's so important to understand what is fair value gaps. All right, so these are the two types of fair value gaps. Here we have a bullish fair value gap, and then here we have a bearish fair value gap. So how do you actually identify these gaps? Well, you can see here a fair value gap is a 3-candle pattern, right? This is when we have 3 candles and the first candle's top wick doesn't overlap with the third candle's bottom wick, right? So you can see here, this first candle's top wick is not overlapping with this third candle's bottom wick, right? And you can see here we create a gap, and this is your bullish fair value gap. Right here, we have a bullish fair value gap. Then here we have a bearish fair value gap, and it's the same thing. It's the same 3-candle pattern, but instead the first candle's bottom wick doesn't overlap with the third candle's top wick. And you can see here, we have this gap get created. And now this is your bearish fair value gap right here. And what price likes to do after creating these fair value gaps is trade into it and then fill it and then go away, right? And this is when a fair value gap gets respected. This is such an important concept that you need to know for ICT concepts, because again, price often likes to rebalance this range to fill orders before moving lower or higher. So it's really important to know where these gaps are resting so you can get in on these entry points right here. So I'm now show you a quick example of what these fair value gaps look like actually on the charts. So you can see here, we have this first candle here, we have the second candle, and we have this third candle. So this first candle's top wick is not overlapping with this third candle's bottom wick, meaning this is what a fair value gap, right? So price then likes to trade into this gap. We see price trade into here, fill it, and then trade away, right? So this is an example of a bullish fair value gap. Is this a fair value gap? Let's see, we have a one candle here, this is your second candle, and then this is your third candle. Is this a fair value gap? No. Why? Because this bottom wick is overlapping with what? This first candle's top wick, right? This is not a fair value gap, okay? There's no gap in price. We keep playing out price here. We see we have a fair value gap get formed here. Why? We have one candle, two candle, three candle, and this first candle's top wick is not overlapping with this third candle bottom wick, okay? So I want you guys to just mark these out on your charts. It's going to be really, really simple, but it's definitely important that you guys understand what these fair value gaps look like, because price likes to seek these to rebalance price and then move higher or lower. I'm now going to teach you what truly moves the market. Next up is mastering liquidity. This is the magnet of price. Price doesn't move randomly like most people think. It moves with intention, targeting stop losses of retail traders, which is why it's so important to start spotting these liquidity pools, because if you don't, well, then you're going to be used as liquidity. And it really comes down to 2 liquidity pools and how to actually spot them. I'm going to show you that right now. Okay, so I'm going to explain the 2 types of liquidity that you need, okay? And it is external liquidity and internal liquidity, okay? So what is external liquidity? Well, external liquidity is simply going to be swing highs and swing lows, right? So this is an external liquidity pool here, and this is an external liquidity pool right here, right? This is a swing high. This is, you have your low, you have your lower low, then you have your higher low. And this is your swing high, because we have a high, then we have a higher high, and then we have a lower high, okay? So this is your swing high. Now, the market tends to move from external liquidity to internal liquidity. You'll often hear people say ERL to IRL, and then it will move from IRL to ERL, internal liquidity to external liquidity, right? It sounds complicated, but it's really not. I'll explain it more in depth right here. And external liquidity is, again, these swing highs and lows, and then internal liquidity is going to be fair value gap. So this is a gap, okay? And price likes to trade into these gaps, right? Into these obvious fair value gaps right here. And this is like the most obvious one that we can see, right? And we will trade from this. And then if we are going to be truly bullish here, Price will trade from internal to external, okay? And as you can see here, we fill this, then we trade to external. And then the market will continue doing that. Every time we put in play a new swing, right? And you can see now we have this fair value gap in play, right? Is this a fair value gap? We have a, high here, we have another high, then we have this. No, because this candle's high overlaps with this candle's low right here. But this is a gap because this 3 candle pattern right here, this high doesn't overlap with this candle's low, right? So we see we have a fair value gap form right here. And now you just wait for a swing to get put in play. There's the swing that gets put in play, right? Here, this is your buy side liquidity. This is your external liquidity. And the market trades from external to internal, filling these gaps. And then if we're going to continue being bullish, we'll then go to what? Back up to external liquidity, external, internal, and then internal to external. As you can see, that's just how the market moves, right? We move to different liquidity pools. And then we also are moving on the higher time frame really to the obvious external liquidity pools, being what? Well, we have this obvious liquidity pool right here, right? This buy side liquidity, that's truly where the market is trending on the higher time frame, right? As you can see, we just keep doing this. We keep filling in these fair value gaps. You can see we have 2 gaps right here. The market will trade into this and then trade up to this external liquidity right here. And then I'll play this out and we shoot up, hitting this buy side liquidity. So this is simply how the market moves. And oftentimes after we end up taking out this liquidity, right? As you can see, we took out the obvious swing high here. What price likes to then do is usually flip direction, right? If we start seeing structure now to the downside where we start disrespecting these gaps, right? You can see here these gaps get respected, meaning we don't close below it, right? You can see obviously we wick it and then we trade through, right? There's no candles closing through this, no candles closing through this, no candles here closing through this, right? And all of these gaps are getting respected. But we end up taking out liquidity here, right? Very obvious buy side liquidity right here. And then what does the market do with this fair value gap? We end up closing below this, right? So now this is that sign of that bearish market structure. And you can see we start getting that market structure shift right here and we start flipping direction after we seek that liquidity. And now the market is moving from, again, internal right here to external, right? External being right here. And then we start seeing that bear structure, targeting new liquidity pools like here at these swing lows, start targeting these swing lows here. And this is, again, just how the market is moving. Now that you understand all of these concepts, market structure, liquidity, and fair value gaps, I'm going to show you how to combine all of them to actually have an entry model. So my personal entry model uses these 3 concepts: market structure, fair value gaps, and liquidity. Okay, so now I'm going to break down my entry model. And again, it revolves around just these 3 concepts: liquidity, market structure on the higher time frame, and overall fair value gaps, right? So as you can see here, we have liquidity. Liquidity is just those swing highs and swing lows, those major swing points in the market, right? And we end up sweeping out liquidity here. Once we get a body closure through this fair value gap, this is my entry to then short the market, right? If we end up sweeping out liquidity and then we get this entry right here, then we could target any sell side below us, right? Now, this is when a fair value gap gets disrespected, right? This is simply when we get closures through these gaps. As you can see here, we are closing through this. We're not wicking it, meaning we're not respecting it. We're not doing something like this, right? This is when the fair value gap gets respected. We're closing through this, meaning the gap is getting disrespected. And this is my entry. This is my signal for price to go higher. All right, so now I'm going to show you guys all of the steps of my model and how I actually catch these trades, right? First things first, I need to understand my higher time frame trend, right? So I'm looking at the 15-minute, I'm looking at the 30-minute, the hourly, the 1 hour, the 4 hour, right? And I'm looking at all these time frames and I'm looking to see where is the market trending towards, right? As you can see here on the hourly, we have currently a low, we have a high, we have a higher low, higher high, higher low. So higher highs and higher lows are being put in place, right? So that's very obviously a bullish sign, right? And we can also look at just at like this line chart, right? And you can obviously see that we are just trending up. We are in a uptrend, right? So what am I going to be looking for? Longs, right? Now, I want to also identify my swing points, my liquidity pools, right? As you can see here, we have an obvious buy side liquidity pool right here. We have this this external liquidity right here as well, right? So we have all these swing highs intact. Now, I really want to be targeting this major swing high here because this is the obvious one on that hourly, on that 4 hour time frame, right? It's more obvious. So I'm then going to drop down to, the 15-minute when I'm coming into the day, when I'm coming into 9:30, and I want to see manipulation lower into a key level, right? Into what? A fair value gap, and I want to see price also sweep out some sort of liquidity. We have sell side liquidity here, and we also have what? A fair value gap resting here, right? This is your fair value gap, and this is your liquidity pool right here as well, right? So coming into the day, right, I want to see price, again, trade into this sell side liquidity pool, trade into this fair value gap, and then we can look for longs up towards these highs. And this is just going to be a fake out move, right? I don't want to see price, if I'm bullish, just immediately rip higher. That's probably not going to get me the best entry. The best entry is when price goes lower, manipulates, fakes out everyone and thinks we're going short when actually we're just sweeping out liquidity. We're trading into a fair value gap, and then we can take longs off of this level. So we can play out price here. Price does end up trading higher, but we end up generating liquidity, meaning what? We don't take out this liquidity here. We end up leaving this high intact, right? Which is really, really good. This is a great sign that the draw on liquidity is still higher and that the market can still go higher from here, right? Higher time frame structure is still there and the fair value gap is still resting here, right? So we can play out price a little bit more, and we're just simply waiting for this low to get hit. Boom, that low gets hit, right? Now, from here, I'm going to look for the highest time frame inversion fair value gap of this leg, right? So we can see we have a high here, then we have a low, right? Again, we need to identify your swing highs and swing lows for market structure, right? We have a low, high, low, high, swing high, swing low, and then boom. This is your high to the low that ends up hitting this key level, ends up hitting the sell side liquidity pool right here. So from here, I'm going to identify the highest time frame inversion of this leg. All right, so what does this mean? So we have a fair value gap right here, right? This is your bearish fair value gap. Now, do we have a 2-minute fair value gap? Let's see. We do, right? So if I'm going to be bullish and my entry signal means I need to wait for this 2-minute gap to get broken. Do we also maybe have a 3-minute? We do have a 3-minute above. So from this high, again, to this low, I need to look for the highest time frame. Is there a 4-minute? No. Is there a 5-minute? No. So this 3-minute would need to get broken for me to enter into my play. And let's see if that ends up happening. That gets respected and we trade lower. So this gap actually ends up getting respected. We then trade lower. We end up sweeping out internal liquidity once again. And now we slowly start seeing price displacing higher. So from here, we are still, again, in our key level, right? We swept out the sell side here. We are still respecting this higher time frame bullish for value gap. We're still in that higher time frame bullish market structure, still have our draw on liquidity intact. So from here, I'm now going to look again at the swing high to low that swept out liquidity. So we have a high here, then we have a low. We have a fair value gap resting right here, right? So does this mean I'm going to be entering into my longs yet? No, right? I want to wait for this gap to get broken. And also I'm going to check on the other time frames if there's higher time frame fair value gap. So let's see, is there a 2-minute? Yes. Is there a 3-minute? No. So the highest time frame in this leg is this 2-minute gap. So I'm going to wait for this 2-minute to get closed above, and that is my entry, and that is my signal to then go long. See here? Boom. We end up closing through this fair value gap here, and we can enter right here. We can just market order with a stop loss at the swing low, and then have a take profit at our intended draw on liquidity. And this is also really good because, as you can see, we also created a bunch of swing highs here that didn't sweep out other swing highs. This is a great draw, and this is a great concept to also learn, which is called low resistance liquidity. This is when we end up generating a bunch of swing highs that, again, don't sweep out other highs, and we have a bunch of stop losses resting here, right? So we have stop losses resting here. We have stop losses resting here, right? But is there stop losses, a lot of stop losses resting here? No, because we end up sweeping it out. We end up sweeping these out. So this is a great sign when we have, this is called high resistance liquidity at the lows, and then low resistance liquidity at the highs. And then all these confluences put together, and this is my entry for longs. We have this 2-minute close, and then I go break even at the internal high that ends up having this manipulation leg, right? So remember when we identified our manipulation leg from this high to this low that swept out this liquidity here, I'm going to go break even once we hit this. So I then move my stop loss to break even here, meaning I'm moving this to my entry point. So even if it does go back to my entry, I have not lost this trade. I will make $0, right? But this is just, you know, having a more safe approach to trading like this is definitely the way to have that really high win rate. And then as you can see, price ends up trading, and eventually, finally, we do hit that draw on liquidity right there for a really nice 1-2-2 RR in this trade. And I would usually take profit around a 1-to-1. So it could be something like this to around a 1-to-2, depending on how much conviction I have. I actually did take this trade live, and this was one trade that I think I took all the way up to here. I didn't take the whole entire move, but you can see that it did end up playing out perfectly with my bias. And that's pretty much it. That's all the concepts I use, and that's exactly what I do every single day, and that's what I've been doing for years now. That's helped me generate so much profit and cut out a lot of the guessing that I used to do. So now that you know all of this, that doesn't mean that you can now just go apply it in live markets right away, okay? You need to practice, and this is where 99% of traders go wrong. I'm telling you, if you skip this step, you will not get your funded account in the first try. You will not get a payout. So it's really important that you follow this step, because I see it all the time. People will watch a couple YouTube videos, they'll learn the concepts, and then they'll hop into live markets, or they'll buy a funded account, and then they'll blow it immediately because they haven't actually practiced it for themselves. So I'm gonna do you a favor and show you how to start practicing using these concepts and using this entry model so you don't have to waste hundreds and hundreds of dollars. So the first thing I want you guys to do is to hop on tradingview.com. I want you guys to download TradingView. I already have this downloaded, but as you can see, you click download for Windows or Mac or whatever you have and download TradingView so you can start watching the markets every single day. And you can also start paper trading with TradingView. So it's really important that you download TradingView. All right, the next thing I want you guys to do is to go on fxreplay.com. This is where you're going to be backtesting and practicing the model and the concepts that I've just taught you. Okay, it's really important that you guys backtest. I used to backtest 1 week of data per day. This is what I did when I was unprofitable, and it's really what progressed me the fastest. So hop on FX Replay. As you can see here, it goes over everything. For example, here, your win rate, you can see your P&L that you've made over the years. You can go back to, like, for example, 2020 of January 1st, and you can backtest that exact day to see the model and see the concepts play out in front of you. Okay, so it's really important that you guys backtest. You can refine your data, refine your model, see what you're doing right, see what you're doing wrong. And again, it's really, really important that you guys start backtesting. All right, so now that you've downloaded TradingView and you've been practicing with FX Replay, 1 week worth of data per day, it's now time to start paper trading. Okay, so this is called forward testing, right? So you can go ahead and open up your paper trading account with TradingView right here, where you click on the trading panel and then you click paper trading. This is your brokerage simulated by TradingView. Click connect. Super, super simple. I am using this account, I guess, and I'm up this much, right? And what you can do here is actually just simulate you trading, right? Right now the market is closed, so I can't place a trade, but you can do exactly what I've taught you guys, and you can just place your trade, clicking buy up here, clicking sell up here, and practice your risk management, right? You can open up your trade by clicking here. This trade button opens up this order panel. You can set your take profits. For example, let's say I want to take a long right here, take profit up here, stop loss. Let's say I want to put my stop loss down here, for example, right? And you can simulate this entry, right? And this is not, of course, using real money. This is your paper money, okay? So how to actually really prove profitability before you go out and buy an eval or before you open up your live account. If you're going to buy a funded account, simulate the rules that you have on a funded account with paper trading. So for example, right, with this account, let's create a new account, right? I want to have $100,000. Let's say you're buying a $100,000 account, okay? You do this, create a $100,000 account and paper trading account, okay? So with this account, I'm going to simulate basically a funded account where I don't want to lose $3,100, right? And I want to make $6,000. That's usually what prop firms offer with like an $100,000 account. So I would say look into the prop firm that you're looking to buy. Look at their rules, right? There's great prop firms out there. I use Apex, which is a great prop firm. I also use Alpha Futures, Tradeify, MyFund Futures, all great prop firms. Also, if you want codes off and any discounts for those prop firms, link is in the description below. All of them are great. But yeah, I do have codes for them. So if you guys do want to check all of them out. That being said, right? So simulate that. For example, you want to not lose $3,100 and you want to make $6,000 for, let's say, $100,000 account. Okay. And if you can do that twice, if you can make that $6,000 twice without losing $3,100 twice in a row, right? Because two to make it true, then you are ready to buy your first evaluation. And I would say then you can buy your first evaluation. So you're not, blowing a bunch of money. I see it all the time where people, again, will like learn some concepts and learn the model, and then they'll go into buying their first eval without even paper trading at first and without even back testing. So it's really important you start back testing, you start paper trading first before even thinking about buying your first eval. And once you quote unquote pass these two accounts, you can now buy your first account challenge, your first evaluation, right? So I would recommend, again, Apex, really, really good, really cheap accounts. The rules are a little bit harder though. Alpha Futures is really great, also super cheap, a lot easier of rules. The rules are really easy. It's really easy to get a payout. It's really easy to pass accounts with Alpha Futures. And then same thing with Tradeify. Honestly, Tradeify is even cheaper, I think, all using code PB. Really, you can get the best discounts with that. So I would say check those out. Link is in the description below if you guys want to check out those prop firms. All have different rules, so whatever you guys like best, you can choose. But yeah, I use all of those prop firms in order to make the money that I do. Okay, so now you know exactly how to start trading ICT yourself and the core concepts that will help you get your first payout. And if you're looking to get that one-on-one mentoring to really dial in and learn the concepts and strategy front to back, that's how people like To get his first payout after being in the 1% for only 27 days, and people like Santana who just got a $2,000 payout, then click that first link in the description below to apply. Thank you guys so much for watching.